Final couple of hours of the January series expiry. You're joining us on Midcap Radar on CNBC-TV18. I'm Hormuz Fatakia. With me is Vivek Iyer. Vivek, good afternoon. You're slightly off the highs of the day. A slew of earnings reactions coming in, but there are important subjects that we need to tackle on the show as well.
Absolutely right. It's a packed show. We'll start off with the top headlines immediately. Well, first up, stocks climb up in the run-up to the union budget despite soft overnight cues, with the US Fed pushing out a possible rate cut. Realty and oil and gas are the big gainers, while consumer durables and IT drag. Mid-caps relatively underperform.
Pharma stocks like Laurus Labs and Aurobindo Pharma have surged after the US government announced a waiver on its 90-day funding pause on HIV medication. The waiver will also allow people in several countries to continue accessing the life-saving HIV drugs.
ABB India under pressure after its parent ABB Global reports Q4 CY24 numbers. Order inflow growth for India region declines 21% on a year-on-year basis. Stock loses nearly 5%.
India gears up for the AI race as the centre launches common commute facility for 18,000 GPUs. GPU provider Tata Communications has surged over 2.5%.
After trimming its stake down to 51% last year, Whirlpool plans to pare its stake to 20% in its Indian arm, reducing it to a minority investor. High relative valuations and the need for cash are likely drivers, but the move leaves shareholders in a whirlwind. The stock tanks.
The broader markets have cooled off from the highs of the day, and they're almost turning into the red is the mid-cap index. Same is the case for the Nifty as well. But there are plenty of movers in the mid-cap universe, and Vamakshi is joining us to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, plenty of movers in the mid-cap space. And let me first look at some of the stocks that are gaining a momentum in trade today. First up is Archean Chemicals. That stock saw an uptick of almost 12%. In fact, the stock had surged higher in the day, and that with that, the stock saw the biggest intraday gain since its IPO. The other mover in trade today is JBM Auto. That stock is up nearly 8.75%. Laurus Labs also seeing its biggest intraday advance since June 2021. Netweb, on the other hand, is up nearly 6% today. The stock has been recovering over the last couple of sessions, and since its low, the stock has recovered over 15%. Next up are some earnings reaction. We have Hitachi Energy, of course, up and away in trade today, locked in the upper circuit today at 20% higher on the back of a good set of numbers as well as robust order inflows. Electra Green Tech is another counter that is up nearly 8%. We also have Ask Automotive in focus. That stock is up nearly 2%. Whirlpool, apart from the news, also reacting to its numbers, down nearly 20%. Samhi Hotels also down nearly 5%. Let's also look at some of the realty counters, because all of the realty stocks are up and away in trade today. We have several counters like Puravankara, Godrej Properties, Macrotech Developers, Prestige, as well as Phoenix that are up and away in trade today. And lastly, let's also focus in on some of the top losers this time around. Deepak Fertilizers is seeing the biggest intraday fall since June 2021. The other counter that is declining in trade today is CAMS, down nearly 8.5%, Balrampur Chini down and out nearly 4.5%, eClerk Services and Craftsman Auto both down somewhere around 4%.
Actually, thanks a lot for that. Some interesting names there in the broader markets. We'll take a short break, but just before we do that, quickly pull up Adani Ports, and we'll get you more on that as the show goes by. But the stock is down almost 7% after its earnings announcement. The company increased its guidance, is seeing some recovery from the lows, but still down around about 5%. But before we take that break, let's introduce Growth Code, an initiative by Grow and CNBC-TV18 that offers valuable insights and strategies to help you make well-informed trading decisions. This week, in an exclusive interaction, CNBC-TV18's Prashant Nair interviewed SEBI's whole-time member, Anant Narayan, and asked him about the risks of overtrading.
Markets are all about activity, and we track it every day. But SEBI, you publish so many papers which kind of show overtrading and the risks of overtrading, and also just, the chances, the probability of actually what percentage of people make money. Just pure trading, right?
Sure.
So just talk to our sort of audience regarding that. What is your own perspective? Are you saying the more you trade, the less you make?
Absolutely, Prashant. There is plenty of research to suggest that at an individual level, precisely what you said, the more you trade, the less you tend to make. And there's a very rational explanation for this. Every trade comes with transaction costs. There's typically intermediary charges, there is taxes, there is exchange fees, and a whole bunch of things that go with every single trade. So the odds are stacked against overtrading.
Typically, nobody talks about those things. You just look at, well, you bought something at 10 rupees, I've sold it at 15 rupees, well, this is what I've made. But there is all these other things which you spoke about, right?
That's
which
right.
you must take into account.
That's right. And there is plenty of research, both at a global level as well as at a India level, which suggests that the more you trade, the less you tend to make. For instance, we did an analysis in SEBI, which looked at the activity of intraday trading. So those who took part in intraday trading, what we found is that over 70% of those people tend to lose money in those trades. In January 2023, we found that 89% of all individual traders in F&O markets tend to lose money. When we updated that research later in 2024, we found that 93% of individuals over the last 3 years have actually been losing money.
Welcome back to Midcap Radar. Well, we are now joined by Sandeep Parekh, Managing Partner and Founder at FinSec Law Advisors, and Deepak Shenoy, Founder at Capital Mind. Both of our guests have joined us today to discuss some very interesting rules that have come about from market regulator SEBI that actually go ahead and have caused further restrictions as far as the activities of influencers are concerned. It's a very important development, a very interesting development. First up, Sandeep, let me come across to you. How do you go ahead and implement these further restrictions that have come in from SEBI? You will have to go ahead and ensure that all of the activities of influencers are being regulated.
Right. So I think this is actually more of a clarification. The rule has already been implemented, I believe, in August of last year. And I think it's completely impractical to implement this because it's kind of asking, again, if somebody's a full-time influencer or something, you can probably track that person. But this seems to kind of go way beyond that. And it's expecting, let's say, for instance, a mutual fund AMC to track all the behavior of all the distributors, saying they're your agents and therefore we want you to kind of make sure that they don't do any illegal behavior. And this is practically impossible because a mutual fund can have hundreds or even thousands of distributors. How do you control their behavior on the side unless, you kind of looking at every action of theirs, you maybe put some spies outside the house of the distributor. It's completely impractical to kind of, even if you are able to monitor your 20,000 or 5,000 distributors, how do you implement action against them? You have no power over them, really. So just by calling somebody your agent doesn't give you any access or power over them. So I think it's completely impractical what SEBI is trying to do with respect to these norms. Again, the restriction is not just influencers. They made it very broadly. Anybody who gives any sort of advice.
Right. Deepak, good afternoon. Thank you for joining in. SEBI is putting curbs on all of this, but the buck to a certain extent stops at the retail investor as well, right? Yet despite the numerous studies, warnings, and so on and so forth, if they continue to engage with the influencers, how do you track that? How do you curb that? You can't monitor every single individual, right?
Yeah, I think, firstly, I think Sandeep is absolutely spot on, is that the range of the interpretations of this law are so wide that I don't think even SEBI will go down and say, we will implement this to the absolute T, because it's almost like saying you cannot live on the road where potentially anybody has committed a crime. You have almost no way to figure out that by yourself, and at some level it's difficult to kind of practically do it. But more importantly, how do you, for instance, what do you call of influencer? That's also clear. And what do you call association? It is an indirect or direct payment to a person who has either recommended stocks or securities, or who has claimed that I have given you so much performance. So given that, my feeling here is SEBI is only going to go after those people who are pretty much like saying, listen, buy this stock. Look, I have done 40% in the last 1 year. Therefore, you should listen to me or pay me or something like that. And this person puts a YouTube video. Then a mutual fund AMC maybe has a YouTube advertisement of itself. And in that YouTube video of that influencer, an ad of the mutual fund shows up. So this is like almost like, listen, your ad effectively goes to pay that video guy. So you should somehow not include that influencer in your ad list. Difficult to implement perhaps, but still doable because you have a list of people who are perhaps abusing the non-registered part of the investment advisory kind of universe. And therefore you are aware of such people. And therefore you can say, my ad should not show up there. That is more practical to think about, but I think can you stop people listening to influencers? That no, and I don't even think that's the objective. They don't want. SEBI saying we can't stop your media freedom to listen to whoever, or the media freedom for anybody to do this without a registration. But if you do these things, then be sure that you will not get paid by a regulated entity that is owned by SEBI or regulated by SEBI. That's all I think the intent is. And I think they will only go after the extremely highly, people who are probably abusing it and causing damage to investors rather than against everybody. I know it's a sad state of affairs that, the rules are so wide, but, I think that's the practical implication of it.
Thank you so much, Deepak. But Sandeep, I believe the main purpose of this particular exercise is to ensure that under the garb of education, influencers might be getting away with going ahead and manipulating and also doing recommendations as far as stock price is concerned. That is also one of the reasons it appears as though SEBI has strictly mandated that they use 3-month-old charts instead of live charts. So how do you differentiate between what is education, what is influencing the stock price, and what is essentially manipulation when it under the garb of education?
So I think, first of all, before you answer the question, I think this is kind of a lazy way of regulating, really. Instead of going after the person who's violating the law in terms of making recommendations without license of either research or investment advice, you're basically saying, like Deepak said, anybody who walks in a road which has a criminal, you'll be liable for his action. It's not much narrower than that, because how do you control that person? Even if you know that person, at the most, you can say that now I know about this and therefore I won't associate with that person. But making you responsible for that somehow, falls outside, number one, my ability of my knowledge of that violation, and number two, my ability to control that person. It's SEBI's job to control that person, and therefore, I think they really need to kind of relook at this. Certainly, anybody who is making giving stock tips, giving investment advice, etc., is in direct violation of not being registered as an investment advisor before giving such tips. And the answer has to be with proper enforcement against the wrongdoer, rather than kind of making it a responsibility of private entities who have very little to do with that person.
All right, Sandeep, Deepak, this is a very, very wide debate of discussion, but we're running out of time. So thank you so much for sparing time and joining us today on this issue of the SEBI's latest clarification on the moves to curb influencers. And we take a short break here on Midcap Radar. On the other side, we connect with Nishant Arya of JBM Auto to discuss their quarterly performance and the road ahead. Stay tuned. Welcome back. Getting back to corporate conversations then, JBM Auto reported a steady quarter this time around. Both the component and the OEM division saw margin expansion. Profit also increased from last year. To discuss more on this, Nishant Arya, who is the Vice Chairman and the Managing Director at the company, is joining us now. Nishant, good afternoon. Thank you for joining in. Your quarterly performance has been steady so far, right? Your profits were up almost 8%. And in terms of its revenue as well, for the first 9 months, you are up around 8% for the top line. What do you expect to end the year with, and do we expect double-digit growth in FY26?
Yeah, definitely. The guidance which we have given for FY25 has been more than 6,000 crores. So we would be maintaining that guidance. And definitely the profitability has gone up. So if you see that in Q2, or if you look at on YOY numbers from Q3 of FY24 to Q3 of FY25, we've jumped by more than 2% on the EBITDA level. So our focus has been top line and bottom line. So the company's asset utilization and productivity is going up substantially. And we are well prepared because Q4 is always the best quarter of the year for the company. So we are fully geared up for that.
Good afternoon, Nishant. Nishant, while there's been significant margin expansion, operational excellence that is seen across a couple of the divisions that you just mentioned, what's missing traction is the bus segment. So when can we expect a revival over there? How's the order book in that particular segment looking? Have there been any lumpy one-offs that have led to a muted show this time around?
No, not a muted show because of elections and because of market expansions and Maharashtra elections. I think the first 6 to 9 months have been more stable, and a lot of the things got pushed out to the fourth quarter. So I think fourth quarter would be capturing a large part of the year, which it always does, but this year it will be even more significant. And with that, we would be crossing 6,000 crores of top line as a company.
What about the latest launch that you have made, Nishant, the electric medical mobile unit? What kind of incremental revenue you are expecting from that going forward? And also part two, what is the launch pipeline looking like for the next year?
So we have launched 4 new products this year in the Bharat Mobility Show. So we launched Galaxy Hybrid, Seater and Sleeper. And this is first of its kind, which is getting deployed everywhere, which has either full seating capacity in the ultra luxury bus, or half seating, half sleeping, or full sleeping. And that's received a huge traction. And parallelly, MediLife, which is the mobile medical unit, as you rightly mentioned. Then we have launched Express, which is the intercity bus. And fourthly, we've launched the full new platform of 9-meter low floor, which is for city and airport applications. All put together, and all our existing products put together, we have an order book of about 10,000 plus buses now. And we would be looking at delivering these buses over the next quarter and the next 2 years. So we are fully booked and having a very good capacity utilization and order book to give us a clear headway as we move forward.
Nishant, you've told us that you have an order book of in excess of 10,000 buses. We also understand that when it comes to the ordering pipeline or the tendering pipeline, competition in this particular segment has become very fierce. Does that mean incremental order book accretion will come in at lower margins? The second question is, we've asked this to you a couple of times in the past as well. You are looking at acquiring an asset. We understand that you were in talks with SML Isuzu. Will you still be looking at inorganic growth as well?
No, we are always open to new opportunities whenever they come by. And definitely we keep evaluating them wherever it has a strategic alignment with our existing business. So that is a primary focus, because idea is to grow the business exponentially, organically and inorganically. So that is a part of our strategy wherever that opportunity comes to us.
And competition in the buses segment?
Competition in the buses segment is definitely going up, but they are very limited EV ecosystem players. So we are across lithium batteries, across bus manufacturing. We have the largest capacity in the country. And then we provide our own charging solutions. So we have end-to-end technology, which covers about 65-70% of the whole ecosystem requirements, where we don't depend on third parties. So I think that gives us an edge. And that is why you see that even PM E-Bus Seva 1, we had more than 65% market share. And in PM E-Bus Seva 2 also, we see that as things unwind, we would be working on the best-in-class cities across the country and states, and parallelly delivering products which are having the right technology and are well equipped to deliver the performance in the coming days and months.
Very quickly, Nishant, to finish that inorganic growth point, is there something that's in the offing anytime soon?
Nothing in the pipeline which is concrete as of now.
All right, Nishant, thank you so much for sparing time and joining us today. Wish you good luck on the road ahead as well. There was the management there of JBM Auto, the stock reacting to results slightly off the highs of the day, but still holding on to gains of around 6.5–7%. By the way, the index has cooled off from the highs as well, now below the mark of 23,200. Some expiry related plays coming into force. Now the Nifty trading below the 23,200 mark. A lot of movers in the broader markets. Archean Chemicals has now surged to the highest point of the day, 11.6% higher on the stock. And this is a sudden mover in the last few minutes of the trading session, and that too is seeing good traction. We spoke of JBM Auto, so can't not talk of Electra Green Tech. That too is an earnings reaction and is trading with gains of around 7%. And Laurus Labs holding on to gains of around 6% after the funding renewal coming in from the US when it comes to the HIV medication. So 7.75% higher on Laurus Labs as well. But at that, it's a wrap on this edition of Midcap Radar. From Vivek, me and the show team that put this show together. Thank you so much for watching. MF Corner on the other side.